Here's a nice little write-up I made here. These assertions absolutely confuse me. And that's why when I was studying for the exam, that's why I include them in so many lessons and also just because they're pretty important. You can very easily see these in sims. There are so many sims on what actual procedure do you need to do. And these sims will give you like 10 possible choices. And it's a little confusing. So if you understand, the first step is to understanding these as best as possible. And then obviously you want to understand what procedures to do to remedy and actually get the answers to these particular assertions. Now, these are assertions made by management. So management is saying, yes, everything's complete, everything's properly cut off, everything's properly valued, etc. And you as the auditor are here to make sure that those assertions, those statements are correct. Now, these completeness and cutoff assertions are going to be grouped together. And these are how I'm grouping them together. And kind of the reason there being, a lot of them are very similar to each other. They just have a slight difference. For example, you could say, does that actually exist or did it actually occur? Now, those sound similar. And, if we weren't in accounting, if we were just in an English class, you could say, yeah, they're probably pretty similar. However, if we see here, existence has more to do with actual tests of details, which is substantive testing. And that actually has more to do with the physical existence of assets and liabilities and equity. So we see balance sheets, whereas occurrence has more to do with tests of controls and mostly more transactional. So revenues and expenses. Did that sale actually occur? Did that expense actually occur? You see there, it's a combination of memorizing because just by themselves, the words, now maybe, you're 15th level intellect, you're incredibly smart and you just inherently know that. But guess what? The rest of us are just hardworking accountants and, we're not the brightest people in the room. I got to say, I'm maybe not the brightest person out there, but I'm the most hardworking and I will get the answer and explain it in the best way possible. Although, I do like to think I'm a little bit smart. But here, right, if we memorize this in combination with everything I'm saying here, tests of details have more to do with existence, tests of controls has more to do with occurrence. Like I would memorize everything that I'm going through here. Now here, let's go through it. Starting off with completeness and cutoff, I was just using these two as an example. Is everything properly included and where it should be? These are going to be the questions asked when it comes to completeness and cutoff. For completeness, we want to make sure that all transactions for the period being examined or audited or whatever have been properly entered into the correct period. Okay, right? So all cash transactions that happen in year one actually are included in year one. It's a complete set of transactions. An audit test for this regarding completeness of sales would be to sample shipments during the year and trace each source document to the books via sales journal. Another note, as we go through all of these lessons, I want you to take all of these audit tests and, yes, I've got graphics and charts that lay them out, right? What are the tests we're doing for each assertion? But I think it's incredibly beneficial for you. And I don't normally do this. I don't tell you to, take extensive notes on particular items, but I would say it's incredibly beneficial for you to make multiple, and I love Excel, I love spreadsheets, columns, multiple lists. So under completeness, what are the actual tests we're going to do? Similarly, to test sales, what are the tests that we're going to do? And you'll see similarities. You'll start to actually understand how this works because this is difficult, right? This is difficult because I'm trying to instruct to you how a company operates. And that's very difficult if you haven't actually worked in a company and seen the ins and outs of all of the procedures that are done. So that's why it's particularly difficult here. And I want to make sure that you obviously understand it as best as possible. For cutoff, now this is making sure that transactions have properly been recorded in the appropriate accounting period. So similar here is that is there a full listing, a full complete listing of everything? And then is that full complete listing actually in the correct period? You can see very similar. Again, see differences there as well. Are the amounts correct? Going to have to do with valuation, allocation, accuracy. Now these all have differences here. So we're here for valuation, and we're going to see these apply to different accounts, for example. And I'm actually going to start from the bottom up just because I'm psychotic and I like to do things different sometimes. Accuracy, this is going to be more associated with errors. So are the financial statements accurate, meaning they're free from errors? The followed GAAP, so the company followed GAAP, the financial statements followed GAAP, but they simply messed up the numbers and they were inaccurate. So that's accuracy. Are the amounts correct? However, allocation, here this is going to include matters such as inclusion of appropriate overhead amounts into inventory valuation. So it's not that there was an error. This allocation concept has more to do with that you incorrectly classified amounts, which screwed up the question, are the amounts correct? You messed up where amounts should go. Maybe you capitalized something instead of expensing it. Obviously, you can see why that's different than something like an error for accuracy, where you just simply messed up it mathematically. Lastly, here for valuation, you're going to see, was this the proper method for GAAP? So here, it's not, okay, did you actually, accurately classify expenses or costs? Here, it's going to be, did you follow GAAP? So we see here, they followed GAAP, but they made a mistake. But for valuation, did you even follow GAAP? Is it properly valued? Is it following the rules? Are the amounts correct according to GAAP? Writing up land to current market value is clearly not proper GAAP. That assets, liabilities, and equity interests are included in the financial statements at appropriate amounts relative to the requirements of GAAP. Obviously, GAAP is going to tell you how you should value each particular asset and liability, and any resulting valuation or allocation adjustments are appropriately recorded. We see the differences there. Again, when I was taking the exam, no one really properly broke these out in a good way for me. And again, this is my goal here for you, is to make sure you understand the difference. Moving on to existence and occurrence. Here, transactions, and we're going to talk mainly about revenues and assets. And why is that? Well, because revenues and assets are more likely to be overstated. Obviously, this applies to all the transaction classes. Did they actually exist, and have they actually occurred? Now, as I mentioned before, this existence is going to be more test of details, doing physical inventory accounts. It requires the auditors to confirm the physical existence of assets, liabilities, and equity accounts. And then occurrence here, this is going to do more with test of controls, testing internal controls, assessing control risk for purchases is an example here. We're going to make sure we test those controls to make sure that revenues and expenses are actually going to be properly processed within the entity. And what would be an example we do here? We're going to vouch entries from the voucher register to the supporting source documents. We'll talk about vouching, tracing, all these processes in a little bit. Next, we have rights and obligations. Are assets listed fully owned? Meaning, if we say we have all this cash, like, is it actually our cash, or do we owe it to someone? And are all the debts owed listed? Everything that we owe, do we actually properly list that, or are we trying to hide any liabilities? Are we trying to hide anything that we owe and not let it be known to the financial statements? That's what this question asks. That's what these assertions have to do with. Now, rights is going to be more having to do with assets, and then obligations more with liabilities. But we see the connection here and how they're a little intertwined. Here, where rights, does the entity have the rights to all the assets listed on the balance sheet? Yes, you have a bunch of vehicles, but maybe those vehicles are pledged to be sold to someone, or maybe you pledge them as collateral. You can see many instances like that. Obligations, does the entity include all liabilities in the balance sheet that reflect an outstanding obligation? Maybe you're trying to hide a particular credit card balance for the company, or you owe some debt and you just didn't include that on the financial statements because you're trying to make it seem like the company doesn't have as much debt. That is a concern to be noted here. Lastly here, we're going to ask the question, are the financial statement items classified and presented in a useful way for the users? This is going to have to do with more possibly the notes, financial statements, as well as making sure that the asset classes and other classes are properly classified. Talking first about understandability of presentation, this assertion is going to ask and talk about information included in the financial statements has been appropriately presented and is clearly understandable. So just overall, right, like, do you have 15 cash accounts that have strange names, right? That doesn't help anyone. Do you say bank account A used for paying down account B? That's a little misleading to the users. You kind of want to give descriptions. You want to make sure that a reasonable user of the financial statements can understand what the heck is going on. If you say cash account A pays down B, I might not know what that is, but if you put a note in the financial statement, this is what cash account A is and this is what account B is, then I might know, and that would satisfy the assertion of understandability. Obviously, you're going to see a little more subjectivity here. The auditor is going to say, okay, we want to make sure that someone can reasonably understand what's going on. Lastly, here we've got classification. This is going to have to do with possibly current versus non-current balance sheet classification. Did we inaccurately classify debt as current when it should be non-current, or vice versa? Same with assets. Did we possibly improperly classify our investments as trading, available for sale, held to maturity? If that sounds familiar from FAR, or if you haven't taken FAR, that's an example we can see. Did you improperly classify something? Did you capitalize land when it should have been not capitalized, or something like that, because it's inventory? There's just many different facets that this could fall with. And as a note here, I do have this as a note later on. We'll talk about it. Just as a note, we will see that certain tests can satisfy multiple assertions, and that we're just going to see that, like, some things fall under multiple assertions. That's something, because, for example, with the classification point, is something properly valued and properly classified? Those two could kind of work in tandem with each other, making sure that something's properly valued could lend itself to is it properly classified as well? So we'll see that, talk about it more, give that in more depth.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.